Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Friday the 28th of March. Starting off with the S&P, which basically bounced or hit the old support area, the initial 2025 resistance, and has fallen back from there. There is a gap floor around the 56.70 level, so we're hoping that the market can stay above that and then head back up to the 50-day moving average, 59.07, but as been admitted, the failure at old support, not a great look, and also the failure at RSI 50, not a great look either, so can't rule out a retest of March support towards 5,500 sometime in April. Moving on to the Nasdaq, and here you can see a rather worse picture than the S&P in the sense that the initial 2025 support around 20,500. The best we've managed is 20,300 before coming back. All not over yet though, because there is the gap floor there around 19,700, and while we're above that we could still have a revival back up to the 50-day moving average, 20,900. Obviously still have the risk of a retest of this month's support towards 19,200. Moving along to the stocks, and starting off with Avis, and here you can see that a bear trap gap reversal from below the old $65.80 support there from September last year. Above that, looking for the top of that falling trend channel at $87, hopefully by the end of next month. Stock which is not a familiar one to the US Chartbreakers, Concentrics, and here we've got the classic setup with the gap down that we had back in at the end of September, and a gap higher now. We also had a gap down at the beginning of February, so it's a sort of double bear trap island reversal. Above that, basically the late January peak there at 56.60. We're looking for the top of the rising trend channel from this time last year as high as $85, perhaps as soon as the end of next month. But the key here, holding the old resistance there around 56.60, which actually is also the floor of that gap down that we had back in September. Moving along to Greenland Technologies, and here we've got broadening triangle, and the top of the triangle there around $2.70. We're looking for that while we remain above the 50-day moving average at $1.87. Hopefully the shares can deliver on the upside there, even if they then come back after that. GameStop, a horrible situation actually. Normally we look at the good, the nice things, but in this case we had the shares all set up within a rising trend channel base, let's call it, but basically the Wednesday gap through the 50-day line became an abandoned baby formation, which is what the solo candle is there. And as the concept suggests, the bulls caught high and dry, and we're now back at the floor of that rising trend channel. Anything basically which is below that price channel floor would make this look as though we've got GameStop heading for a new leg lower. You can see though that support in the recent past has come in towards $18.60, and if we do hold below the $22 level, then that's the risk that we have. If you're a fan of the shares, you might want to wait for another end of day close back above the 50-day moving average around $25, but obviously the price channel floor there, the best support, notional support there at $21.80. Moving on to another car hire firm. We've already had one so far, but Hertz Global here, rising trend channel where we've broken through the 50-day line there at $4.04, and we're looking for the top of the rising trend channel there from July last year, $5.70, as soon as the end of next month, while we remain above the 50-day moving average. Moving on to a stock which we covered quite recently, very recently in fact, and here we've got Immunity Bio, a very nice looking setup here in the sense that managed to close above a rising 50-day moving average there at $3.10 with a very strong candle yesterday. That suggests that while there's no end of day close back below that, we should at least head to the top of the recent range, $4.20, and are eyeing up, even up to $5.60 by the end of next month, given how strong that setup looks after that gap down that we had back in December. Moving along to a stock which is a favourite of mine, just because it sounds as though it's a sort of a type of concept which is very much in favour at the moment, micro algo. And here you can see that we've got the shares hitting the first target there and exceeding it, in fact, around $14.30. We're looking at the upper parallel of that rising trend channel base from back in September, as high as $25 by the end of next month, or hopefully much sooner. Second time lucky in terms of the unfilled gap off the low and above the 50-day moving average. This looks like a mid-move consolidation and only back below the $11 level, really suggesting that this is a full store. Ideally, we stay above that $14 area. On to the amusingly named, or amusingly tickered Petco, and here you can see with a falling trend channel there, top of the channel there, $4.50, and above the 50-day moving average there at $3. That's where we're looking for the shares to go. Nice gap off the lows there, and also bouncing off the old August support zone, $2.30. Finishing off with a stock which we haven't looked at before, Soleno Therapeutics. Here you can see that the shares have rather conveniently gone to the top of that rising trend channel, the top of the channel there, $70. So I suppose we're looking for that to be the ceiling for the shares, and obviously seeing how strong the shares can be. But in terms of support, we've got $60 there. So ideally, even if there is some consolidation, $60 would be the retracement point for the stock. That's it for me today. More updates over the weekend.